Stocks freeze as the Fed talks draining, and threats and name-calling heat up between President Trump and North Korean Kim. And as we learned in 1950, you must be prepared to protect ourselves.
We must be ready every day, all the time, to do the right thing if the atomic bomb explodes. Duck and cover. This family knows what to do, just as your own family should. They know that even a thin cloth helps protect them. Even a newspaper can save you from a bad burn. But the most important thing of all is to duck and cover yourself, especially where your clothes do not cover you.
Remember what to do, friends. Now tell me right out loud. What are you supposed to do when you see the flash?
Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market chopped in a very narrow range this week. Really so little happening. President Trump was ever present as he addressed the UN, and he was all over the Twitter sphere. He goes nose to nose with North Korean Kim, and both making huge threats and calling each other nasty names. POTUS came up with some very tough sanctions when it comes to North Korea, and North Korean Kim comes out and he threatens that he's going to explode an H-bomb, hence the 1950 video on how to protect ourselves. He says, the president, that he wants to cut them off, basically financially, and threatens to sanction any country that does business with North Korea. While that's getting some pushback, of course, from the likes of China, the president seems extremely positive about following through on that. Of course, we don't know if it's empty threats or not, but the market seems to be frozen based on that and the Fed. There's nothing to be all that worried about, maybe, except that the investors have seen the market move up to such extremely high levels, and so, you know, potential H-bomb, dirty names, whatever it is they call it each other, you know, S&P 500 over 2,500 and starting to struggle seems like it's worth noticing. Even as the Fed tightens, investors seem to be only giving minor dips to the downside, and then seem to hold and go nowhere. So as the negative news seems to put a cap on the market, the buyers seem to be still there. Now, that might be, except if you look at the NASDAQ, which saw Apple turn pretty sharply lower this week, and at the same time, while the NASDAQ has struggled, the Russell tests all-time high. So we have this huge disparity going on in the markets, all this background news, and apparently what looks like some thrashing going on in the market. Let's take a look now as we look at our 60-minute chart of the S&P 500, which we do every week, and you will see in here as we look at the gray area being the area that is overnight trading, and the white area is the area of the day trading. And you are seeing what is an incredibly tight range in here. I mean, you're looking at a range for the entire week of some 15 points on the S&P 500. I mean, you're looking at maybe 3/4 of a percentage point at the most on the whole week. I mean, that is really nothing going on. Not much news here on Monday. You just saw this choppy market. But look at this as it moved across here just above that 2,500 number on the futures, and then, well, basically stayed in that range for most of the week. Tuesday, the president spoke in front of the UN with some very tough talk. And that kind of moved the market a little bit early in the day. You could see that. On Wednesday, you had Apple come out early in the day and talked about, or some of their users talked about that the iWatch had connectivity issues, shades of the past, when they had that trouble. I think it was iPhone 6 with the antenna. So you got this break in here, and the NASDAQ actually was weaker all week long. The news comes out on Wednesday of the FOMC. They hold rates. They talk about nearly a surety of a December rate hike, and talk about October beginning of the great unwind, the unwind from the balance sheet, as they go from $4.5 trillion down to we don't know where, at a rate that is incredibly slow. They're starting out at $10 billion a month, just letting essentially the matured issues go off, and then they'll start picking up selling and increasing it at some point to $50 billion a month. But if you look at the next year, you'll be lucky to reduce it by $500 billion. They might still be at $4 trillion a year from now, so it's an incredibly slow rate. Wednesday, the markets got sold off early as they started to digest the Fed's hawkishness, and on Friday you got this tough talk that came out actually after the market closed on Thursday, with additional sanctions. They really want to shut off the ability for North Korea to do any banking, and really threatening any countries with sanctions that do any business with them. And then following that was Kim's H-bomb threat that he's going to blow one up in the Pacific. And also S&P downgraded China on their huge bulge of debt. So you got this selling that occurred late in the day on Thursday, and then Friday morning you could see it tried to come back all day, and then it's looking like it's just chopping sideways. Of course, here you have this decline, and then you have this looking like a triangle formation. So it could go either way in there, but you know, if it breaks under this level, it's probably going to get slammed. If it gets above this level right over here, it's probably going to do better. And this is where we stand right now, with just about 2 hours to go in the day. So that is a look at the 60-minute chart of the S&P 500. So the stock market in this incredibly slow week saw the S&P 500 around the unchanged mark at this point. The NASDAQ, however, fell a full point. The Dow Jones up somewhere around a half a point on the percentage point on the week. And with the NASDAQ down 1 percentage point, the Russell gains over 1 percentage point. So you have this huge disparity in there. I'm going to talk about this a little bit later on in the short-term view, as I think there's going to be a reversal of that in the coming week. So stock market, incredibly narrow range. Bond market loses about 3/4 of a point on the 30-year. The 10-year picks up about 6 basis points of yield as it responds to this Fed tightening that is coming. Yes, it's a tightening. It's a draining. When the Fed put money in the system by buying up all the securities, they flooded unmonetized, and essentially what they're doing is reversing that. They're unmonetizing. It's a drain on the system when they do that, and the markets will respond in that way, as if there is less liquidity. So less liquidity, of course, not good for the stock market. It tends to be better for the dollar. The dollar gained, but really small on this Fed news, as the bond market didn't pull back all that much, and there's a linkage there right now. Gold and silver under huge pressure this week. looking to me like somewhat of a capitulation. We're looking for gold and silver to do better right now, but it's been under a lot of pressure, and this less liquidity has gold and silver investors, pressure, even platinum is worse than either of those, moving to the downside, as the fear is there'll be less money to buy those things, or less of a possibility of inflation. How do you like that? And Fed wants inflation up. I did some really good videos recently about the bond market. You should really watch the one I did on the bond market big picture, where I talk about why the Fed is motivated to break the bond market, and I think it's really interesting. You're going to want to watch that, so become a member. Oil edges up a little bit, just a few pennies on a very narrow week. So while there's an H-bomb threat out there, and President threatens total annihilation and destruction of North Korea, all of that seems somewhat ridiculous and bloviating by the two of them. The Fed drain, however, is very real, and you can never deny that, you know, when two world leaders are threatening each other the way they are right now, that something might happen. But when it comes to the Fed, we know something is happening, and they're essentially draining, and in some ways that is a very important thing to be looking at when it comes to the market. So we were looking for stocks to rally into this week, and thinking that right around the Fed time would be a high. That worked out. We'll talk about that in our short-term view also. But now it gets much tougher for the bulls. If the world does not explode this weekend, then the bulls have something to prove. If you get through, you know, Saturday, Sunday without having an H-bomb exploding or another long-range missile test, then the market's probably going to tick up, and then the bulls are going to have to prove they can hold a rally. I have serious doubts about that, and I think that if nothing happens and the bulls try to get it up and they can't anymore, then I think that sellers are going to come in a big way, and then maybe it is time for the bulls to start thinking about it's time to duck and cover. Yeah, ridiculous the way they looked and taught things in 1950 about the potential of an A-bomb attack, but at least in this context, I think it makes some sense.
Remember what to do, friends. Now tell me right out loud. What are you supposed to do when you see the flash? Duck and cover. Duck and cover.
All right, now what we do is we look at the best and worst stocks for the week. We take a look at some of the groups that did really well, some of the groups that may be setting up to do really well, and at the same thing in the worst of the week, we take a look at what things had pretty good declines and maybe setting up to do even worse. So we're going to start out by looking at the energy group, as these stocks have had some really big moves this week. The biggest mover of the week is looking at APC. Now, we talked about Anadarko, APC, and APA, and Devon, and Chesapeake, and natural gas over the last couple of weeks, as we were looking for an upside move in natural gas. And that actually came in a pretty good way, and then natural gas turned down this week. But there's a changed sentiment in the energy sector, as it had a really decent move to the upside in the whole group. We've seen some of the broad stocks in that group, in the like integrated oils and that, picking up their heads in a significant way. But we're going to look now at what is the biggest gainer in that group for the week, Anadarko, as it picks up 13%. You could see in here, this gives us a good opportunity to describe our cyclical analysis, which is the key of the work that we do here in our analysis. So few analysts use this style, and you can learn a ton about understanding market conditions and flow of money by understanding market cycles. So just to help you here, these are the idealized cycles, these cycle brackets. We use those, which is just a drawing tool to help us recognize the distances between important lows in the market flows. So you can see in here that it said that there was a low due. You could see this declining phase and this declining phase. So low due somewhere around here, it was a little bit later. Low due somewhere around here, it was spot on. Low due somewhere around here, and it was, well, maybe a little bit early, but not bad. And then it should have rallied more and rolled over. You see that little head and shoulders that forms in here? And when it breaks down, it says it's going to decline right through this period. Well, you got that spot on, and that shows you how much you can get out of understanding the cycles in each individual stock, future, or in the markets. So we were in a period of potential rally. You can see the rising phases right in here and right in here, right in here, and the one that failed right in here. Well, this one's got some legs. You could see it moving up. We're going to say that this, because of their share buyback and the 13% gain, that we could see it moving up here to the $52 category. So that would really be our projection in there at the intermediate fib resistance confluence that we have right there. So good looking stock right there, and we would be looking for opportunities to buy it on a dip. Devon, DVN in the same group, you could see a similar cycle pattern in there. In fact, it looks so close to APC, it's amazing. Here's APC, that's not it. Here is APC again. You could see that as you look at that. Now get that little picture in there and look at DVN, and you could see the synchronicity in groups is those look very similar. We could see it moving up here to about $38 near that in this pattern. You could see the reason we don't have it moving up a lot more is because this is the negative cycle that formed in Devon, just as it did in APC. Generally, you don't get giant moves after that. You need to build the base, and then after the base is built, you can move up over here. So Devon also looking pretty good. Also in this category is Hess. Hess Corp. This used to be the old Ammer out of Hess, and you can see the similarity in the patterns as it looks like this one is about to hit into this resistance zone. Maybe it makes it up to 46.5, but you could see also in this rising phase, and the rising phase brings you a pretty good upside move. It's interesting when you look at this, we call this a harmonic family, that the first cycle was really strong, the second cycle failed. You can see that. This one, the first cycle really strong and then came down, the second cycle failed. We're now in the first cycle again. So that says to me easily could get up to that area up there around 46 or better, and we would buy that on a dip also. So that's a good look at the gas stocks that are looking great. MRO, I've had some emails about this one lately and said that I thought it still was in this rising phase. You could see where it bottomed right there. And this one has our colored phasing in it. So when you see the colors, the green is the rally phase, the yellow is the corrective phase, and when it has a breakdown, it gets into a red phase. And usually when it does that, it's going to fall for a long period of time. You could see it did that right there. It's now in this rising phase, getting into the resistance area, approximately 1275 to around 1370 is the upside projection in here, but we're not looking for all that much more there. So you could see these the strength coming in these very beaten up stocks in the energy sector. It may just be that they're bargain hunting. ConocoPhillips, this is a good pattern in here in that it's made back a significant portion of this decline. So in other words, from this low, from this high to this low, it's almost back up to that high again. So when you recover in a cycle 100% of the move, that just says you're likely to get up through that level, come down, make a base, and then move up again at some point. So this is a good pattern there in Conoco, and you can see that following MRO and the major integrated oil companies, it's looking strong, have similar similar things going on in the other oil, major oils. And the drillers are looking better too. They've had a few weeks where they've moved up. Neighbor and Noble Corp up about 5% on the week. We only have a couple more stocks to look at in the best of the week, as they are stocks that have, one of them had a great pattern, and there's a great reason for it to be moving up, and one of them not so much. The first one we're going to look at is CarMax. Now, we've talked a lot lately about the situation in the auto market. The auto market really struggling. Inventory is up. You have the subprime auto loans heavily defaulting, and the length of loans extended out to a record, and the auto sales really struggling. That has pushed down the prices of used cars in a significant way. What's happened is that if you look at that and add all together, you have a stock that's the company that sells used cars benefiting from it. And then if you add in the hurricanes that's destroyed like 1 million cars that all have to be bought, that's really good for the used car sellers, and CarMax is that big used car seller. Their earnings came out, they beat, the revenues beat, and they're really smoking it here as it moves up to a new high. Let's take a look at these cycle rhythms in here, and you could see very clearly that the alignment of the important cycle lows just screams at you in each occasion. This is the corrective phase. It bottoms and moves up. The corrective phase bottoms and moves up. A very bullish situation. We call this a right-hand translation, where it doesn't give much ground and then takes out that high. You could see the explosion that came. Here's your resistances up here, 75 to 76.5 approximately. I think if you get a pullback in here, you load the boat, because I think it's really going to go higher. This is only 4 weeks into this advance, and a pretty good chance that if you get a dip, if the market causes it to pull back, that you will be getting a good buying opportunity. So CarMax, one that I think is in really good shape, and for a lot of good reasons. Now, this one right in here I don't love, and that is T-Mobile Corporation. You can see in here, just screaming at you, is how Head and Shoulders are constructed. Head and Shoulders top is made generally by a cycle bottoming, then getting a rally, and then the next cycle bottoming, and then the next cycle rallying, but not getting up to the high, and then rolling over into, well, a crash situation. So you could see this giant Head and Shoulders being formed in here. Now, the stock up 5% on their merger announcement with Sprint. So the stock gets a pop, but you could see this area of resistance. It gets back up there. It's starting to resist that again, and this looks to me like it's going to roll over. If it gets under this neckline over here, which is some 57.80 or so, well, that's a long way down, right? Then it breaks down all the way down to 47.5. That's a big bearish call. I'm just going to say that it's a high probability that 59 gets tested in here at that last low, but that doesn't really break the neckline. And if that would happen, well, it wouldn't be so bad, but at least it would give up 5 points, and I think that that is a strong likelihood. And that, you see, is our best of the week. Coming up is the worst of the week. So for the worst of the week, we're going to be dipping back into retail. Retail's been all over the place. First I'm going to show you one of the worst of the week, and then a whole bunch of retail stocks in here. The worst one here that we're going to look at is Bed Bath & Beyond, BBBY. This stock down 22% on the week. It already looked pretty crappy, and it gets a really big hit. You can see in here, I mean, this is cycle analysis that just screams at you. And not only do I have the cycles marked off, the cycle brackets and projections, but I also have in here what you can see is the colored phasing and how it says to you that it's in a major downtrend. So anytime a cycle bottoms right here and you get a good zone, you get a good upside move, and then it comes down here and edges out the low, that tells you that there's some big negative force going on in here. It does the same thing in here, a new low. It does the same thing in here, a new low. Here's your stair-step downward pattern. This was tiny little rally over here brings a collapse. Look at this, tiny little rally again in this rising phase and a collapse. It says it's going to be down in here into November. We don't know how low it's going to get. It's just plain horrible. And Bed Bath & Beyond, just a really bad week. Analysts downgraded it 2 days before earnings on Tuesday, and then earnings came out. They had a big miss. They guided lower. It's just a horrible chart with these 5-6 negative cycles in a row, and there is nothing that says this is going to get any better at all. As far as the other retail stocks that we're going to look at in here, well, we've got a number of them to talk about. It seems like the Amazon effect, or whether it be tapped out consumer, we don't really know which it is, seems to be putting some negative effect on a lot of them as they move down. Sears, SHLD, this is one that we have, of course, not liked. We saw a bottom forming in there, but then it failed, and now it's coming down. This one has another month on the downside based on this pattern. It could actually test that $5.50 low. So you can see this pattern in here looking very negative. You could see our projection in there on SHLD. Take a look at Foot Locker. This one is just full of it. I mean, it's just horrible. And when you look at cycle breakdowns in here, you could see and by the way, this is a Head and Shoulders top that was put in there, and this cycle made the left shoulder, this one made the head, and this one made the right shoulder and the breakdown. You can see that it's so clear. When you got the breakdown over here, it's going to fall to about this time period. Then have a rally which was just sickening and falling all the way back down to this low. We have a low due here in the next 1 or 2 weeks, so the worst of it in Foot Locker should be behind it for now. We'll be looking for a buying opportunity somewhere under 31.5, and then we're not exactly sure of how much it could bounce because it's really horrible, but we're going to wait and see. Under Armour, UAA, take a look at this sick puppy, and you can see in here the cyclic projections, which talk about coming down also into the end of October. So this not looking very good at all, and this decline that it's in looking like it should continue. 8% down on the week also in Under Armour. Best Buy, BBY, not only was this one of the worst of the week, but it's one of the worst charts that we have. Now, we love this stock. Why did we love it? Because it was competing well online. It went from being the catalog for Amazon or online sellers to the showroom house to then really starting to compete. It has a major breakdown in here. So again, you can see in here, it rallied. This was the rally right there. You can have 1, 2, 3, 4 positive cycles in a row. It looks fantastic. It rallies, looks fantastic, but now breaks the low. You get the red zone in here. The most optimistic thing we could say about it is about 49.5 coming sometime in around end of October, beginning of November, or worse. It's right now got down to the 34-week moving average and getting support. You can see that the 34-week moving average gives it support. This one at the bottom of a cycle and then moves up. This one, it couldn't get to it. Bottom of the cycle and then moves up. This one couldn't get to it. Now the middle of the cycle and just slightly breaking under it. Believe me, if it gets under there again, it's going to accelerate, and there is a lot of risk here in Best Buy. So this is one of the worst stocks of the week, and it's one of the worst stocks of the week, certainly. They came out with 2021 targets that really disappointed. One more we'll look at in here, and that is Dillard's DDS, and you can see in here, a bad looking pattern, as it gives you a little rally in this rally phase right in there and is now rolling over. If it gets underneath this cycle support right over there, then that is going to be in collapse mode again, and you should see it move down pretty sharply. You know, you would think coming into the Christmas season these things would look better, but you can basically put in a stop at 23.80, right at 53.80. Sorry, I'm just going to do that. I'm going to create an alert. I'm going to say at or below. I'm going to give myself a note of breakdown, and I'm going to create that. So it's going to tell me when it gets underneath that level, which would be a serious breakdown. Dillard's not looking very good. And the other stock that I love to hate is JCPenney, down 6% on the week, trading under 4 again. When it was trading in the teens, I said I thought it was going to $2. I still think it's going to $2 because I think they're going to go out of business, or at least file bankruptcy at some point, because they are a company that is in meltdown. So that is a look at the retail sector. You could see how horrible that is. Let's take a look at the solar sector now. The solar sector did poorly this week. It was based on the threat from China, and we're getting a lot of this back and forth, that they are going to impose tariffs on solar panels. And then on Friday, President Trump came out with very protectionist comments. So there's this fight going back and forth, and solar is in the middle of it. But SunPower, still pretty good decline on the week. You could see that in here, despite the fact that it's got a 4% gain on the day, it's still down some 8% on the week. And you could see that as it gets down to a very key area right over here. We projected that it might get down to the bottom of that trend, of that channel. Now timing says it's likely to move up again. Maybe the president will be able to protect these. I don't approve of any of that, tariffs, protectionism, anything, but we'll just look at the chart and say it looks like SunPower's at a spot that it will move up. CSIQ, another one to look at in this category, and you could see it was way down in here. It was down some 8% on the week, but now has come back to be only down a few percentage points. And again, that protectionist talk has saved it in this rising phase. It's probably going to continue to be choppy in here. First Solar down about 5% also, and First Solar is one that I think is so high priced that I would completely avoid that one. Two more stocks to look at in the worst of the week. The first one is U.S. Steel. Tweeted this chart out earlier in the day, as got to really wonder, where is the president's infrastructure program that is supposed to give a lift to the economy? Well, he can't get anything passed right now, so we'll see if he in the next week and a half or so can skate through and pull off this Graham Cassidy healthcare bill. I'm not going to comment about that one right now. Well, you know that, I don't like government intervention at any level, and that bill is full of it. So let's take a look here at U.S. Steel. U.S. Steel, it's coming down right now, and analysts, they just love to downgrade this one, so they did it again. It's down about, not that much, about 5% on the week. But note the yellow zone in here, and note the support area right over here. So following cycle theory, that what that says is that if it can bottom in this period without making a lower low and then start to move up, it will have built a powerful base. That might mean that somewhere in this area of 21, 22 in the next couple of weeks will be a great buying opportunity. So it had a big decline way out over here and then made this basing cycle right in here. You see the same thing forming right in here, and then it explodes on the upside right like that. U.S. Steel could be one of the best trades of the fourth quarter for this in the entire market. So keep your eye on that one. Take a look here now. I'm going to show you the daily pattern in here also. You've got this kind of broadening pattern pattern going in there. We don't know if it's a continuation pattern or what it is, but what we're looking at right now is the cycle pattern right in here, which is due to make a bottom, well, basically in the next 1 to 2 days. Then probably get a bounce and come down again. So what I'm doing is highlighting this date. It's around October 16th, where we see the bottom having formed in here. When I look here on the weekly pattern, this comes to about, well, October 16th. So you have the weekly pattern and the daily pattern lining up to that being the buy area. So we're going to look at this area around $22, $22.50, something like that, as a screaming great buy and potential for a great fourth quarter out of U.S. Steel. So that's a stock that's in the worst of the week that may be offering one of the best opportunities. In the worst of the week now, we're going to show you one that has looked pretty bad and has been driving the NASDAQ down, and of course that is Apple. And Apple's got lots of news as their iWatch has had connectivity issues, and there has been a muted launch in Asia and as far as the iPhone 8's going, and Google's buying HTC to aim right at Apple. And here you could see in some important areas, and you can understand the cyclical patterns in here. And that is, there are a couple cycles in here. One, the black one being a little bigger cycle, the lavender one or purple a little smaller, and that one bottoms right in here. So that gives us about another month, 3 weeks or a month of decline in here, and it's rolled over pretty bad. You can see that, and getting to support, you might actually get a bounce. Now I'm going to talk about this short-term pattern, and I want you to remember this when we start doing the short-term view for the stock market in the coming week. Look at this break here from 164 down to under 151. That's a huge break. It's also violated negatively. You see it getting under this last cycle right over there, which is a really bad pattern. However, for the next week or so, we're looking at the potential for a bounce in here before it then turns down again for the next move that should last about a month. So that says right over here is a huge selling opportunity somewhere in Apple, but we're likely to get a bounce over the next week. That should help the NASDAQ, and I think help the NASDAQ versus the stock market overall. So what we've seen is the NASDAQ be really weak and the rest of the market be firmer. That could be reversing, and we're going to talk a lot more about that when we get into our short-term view for the coming week, which, yes, is coming up right now. All right, here comes our short-term view for the coming week. Get rid of all these notes, bring up the rest of the notes as we look at 5 major markets. We're only focused on the daily charts in here because it is a short-term view. We're also going to look at momentum because that's such a key. And as I always do, I'm accountable to what I said in the previous week. And the last week, my average is somewhere around being right about 60-65% of the time. That's 2 to 1, right versus wrong, and I'm really happy when we get there. And this week was about 60%, and that was in spite of the fact that the gold and silver market, which I believed was going to be moving up, moved down sharply based on the Fed. But basically, we got the dollar right, the currency market's correct, we got the bond market pretty correct, and the S&P 500 almost spot on. So as far as the stock market goes. So we're going to get into this and look at light crude is where we're going to start, and we always do, as far as our short-term view. So take a look here at the light crude market. So what we expected last week was that light crude was going to move down and test some support at around 48.65. That support being right around down over here. Now you could see that early in the week it had little dips, but it didn't get anywhere near there. So we don't get any credit for the energy market this week, including the fact that we thought natural gas was going to rally, and it had a big rally, but then rolled over in a big way. I'll show you that in a second. So you can see nothing happened in here this week. I mean, you have a slight upward bias in the market, but basically you have these incredibly slow days. So when you look at this pattern in here, what it looks like to us, and you can see these smaller patterns. So here they are right in here. You see that cycle, and then that cycle, and then this cycle right in here. So that shows itself here, and pretty much really close to what the expectations are. We just thought it was going to dip a little further in there. So what we think now is that, well, it might try to rally a little more in here, but then it's likely to roll over. So we're going to call it a down week. And in spite of the fact you might get some early pop in there, getting down here and testing this minor support at around 49.25. So that would be the bottom of these cycles over here. That lasts about a week and a half potentially, so it might go into the next week, and then after that getting into a little better period. So I don't see anything in here that looks like it's going to be a big move in either direction. I don't think it gets much. I don't think it gets over 151 and a fraction, and I don't think it gets much under the $49 area. So that's calling for a narrow week in the next week. So that's likely to set something up more significant in the following week. Now let's take a look at the momentum in here, and you can see momentum is positive. We're not getting any other signals in here except the fact that it does look positive. Now I just want to look at natural gas, because natural gas is the one that we were really positive on. I mean, we thought it was going to have a pretty good rally. It actually did. Look at the size of this up move on Monday, but look what happened after that as it rolled back down. It's still okay. It's still above that cycle low area at around 288.70, but the fact that it gave up is worrisome. So, you know, we still think that it's okay, but we want to see it pull up from here and not get in any trouble, which it could. You could see in here that it gave positive momentum, but we were concerned. What we said last week was that this is not great momentum. It's not able to sustain itself. You could see the choppiness, and now it's gotten oversold. So we're gonna say it's turning weaker, but oversold. Still green, but not likely to be able to hold that positive momentum. So we're less positive on natural gas now than we were, though we do think it's going to be able to get some kind of a bounce from this area. And if it doesn't put on a big bounce, then there's going to be a reason to worry about natural gas. Next thing we're going to look at is the dollar. So we thought the dollar would bounce and fail with a downward bias. We thought that the euro currency would dip and that it would move up. You could buy it on a dip and it would have an upward bias, and that's basically what we did get. The dollar strengthening only in a very minor way as the Fed news came out about their draining coming forward in here. Let's take a look here at this dollar index, and you know, as we said, bounce and fail. Basically, that's what we got, the bounce and fail. We think that the next week in the dollar, we'll say 3-4 days actually, is going to have a downward bias and relatively small moves, and then the week after that looks like it could get a reversal to the upside. Take a look at the dollar. When you look at momentum, it is sickeningly poor, and every time it gets up to that slim ribbon, 13-day moving average or so, and you get overbought on the projection oscillator, it just then rolls over again. When I put up 6E, you're going to see the opposite, because of course it is opposite and inversely correlated. And here is the 6E, still in very positive momentum. What we thought it was going to do, if it dipped, it would rally, and there came your little dip and rally. What we're looking for is 3-4 days on the upside in here, opposite of the dollar, and then starting to roll over. But there's something that we've been talking about recently, and that is the yen. So I want to look at /6J, which is the future on the yen. We're also converting over to look at the spot market, but we're going to stay in the future right now. So you see it got down to the 78.6% fib, and cyclically it's late. So there's been a lot of selling in here, but an upside reversal is due, and you can see we have it projected right in there to move to the upside. I want you to note it's been extraordinarily negative as far as momentum goes. But the very reliable market forecast on the bottom in here has now issued a buy signal. We think that is going to be a very important bottom in the yen and likely to get some pretty good move to the upside coming, so the dollar weakening against the yen, and we think that is a good trade. FXY is the ETF in there if you are interested in that. So we are liking the yen based on what we're seeing in here, and that's our short-term view on the currencies. Looking at the dollar and looking at the dollar moving up in a minor way, you would think that gold and silver wouldn't have it that bad, but there's all this fear about the Fed draining and all that liquidity which poured into the market that essentially drove gold to 1900. Now beginning to unravel, and if that's the case, that it's a drain, it's less liquidity, should really kill the stock market. But in the meantime, what it's doing right now is causing the holders of gold into some capitulation. So here is the gold chart. We slightly revised this. We'll be sending out some revisions to our subscribers very soon. This is the time right over here where we're expecting gold to turn up. As a matter of fact, it should have been a few days ago, but there has been some large selling, and you can see on here what really got it set off was on the 18th of September. The commitment of traders report showed there were large speculators in the market. So with those heavy amount of speculators, that just brought some selling in, and you got this big decline going right there. So we think it's at the point where it should turn up. Now, we said last week we thought it would trade up, but it really extended further down and longer than we expected. We still think that, and you could see this that line right over there, which was our projection from last week, that now we're projecting it to move up. We think we're going to get up here and test 113.18 to 113.27 here on the gold market this week. But for the moment, that's all we're looking for, as the sentiment in here has really turned south. You can see in here what's happened. Then the positive momentum has now given way to neutral momentum when you look at the gold market. So we're expecting this rally for the coming week, and we think it will be a tradable long side rally. Here's the silver market also, and you can see in here it does the same thing. It extends further down than we expected, gets to the bottom of this support zone. Now what we're expecting is an upturn and getting up here somewhere between 1742 and potentially 1757. So we're expecting an upside test for the week. We're going to look for gold and silver to have up weeks. But when you look at the momentum in silver, you could see the momentum has turned red in there. So you really have to be concerned, because when the momentum turns red in silver, it just doesn't normally do it for a day. As a matter of fact, it did it here for a month, and it did it here for a month. So, we're just a day or two in the red zone in here, and you've got to be concerned that it's not going to be able to continue much on the upside. Hence, our belief that it will try to get up and then roll over again, and that's not anywhere near as good looking of a pattern as it did before. So we got gold and silver wrong last week. The bond market, we thought that we really cautioned in a big way that the bond market was in a short-term breakdown that meant that there was trouble on the intermediate and longer term, and that we expected that it might bounce up and then fail. And we gave a sell zone for the Z for the markets, which it just had kind of a rough time getting up into sell zones. We actually have now reduced those levels, and you can see the pattern in here. So here's your ZN, and you can see that it's in this declining phase. So this actually, the low over here points to right around 1021. So this declining phase this declining projection here actually should be going down to about 1021 and might actually be heading down to 124.16, that last low over here. So what we think is that, you know, if you get a bounce, it's going to fail. We have this cycle breakdown in here. It's very high probability that any bounce will fail. If it gets up here to the 126.23 area, that would be, in our opinion, a pretty screaming sell area right there in the ZNs. You can see in here that when you look at momentum, it has turned red, the projection oscillator moving up, and you look how far away this is from the 13. That is just a very significantly negative pattern when you look at that. So the ZN's looking really bad. ZBs, you see it in here, and pretty much the same pattern, but the projection oscillator even higher. So we think that rallies in the ZBs are likely to fail. Here's our sell zone in here. This is the one we really are, you know, focusing on. 55.09 to about 55.30, that being the negative range, and we think if it gets up to that it's likely to move then sharply to the downside again into the third week of October. So this is a very bad pattern when we see that, and we basically have continued to analyze the bond market really well, and it's bearish, and the Fed wants the bond market down. And watch my video on the big picture on the bond market so that you understand more about that. And I show the dynamic yield curve, which is from stock charts. That's just fabulous to see. So make sure you watch that video. Okay, so now we're going to move to the stock market. But before I do, I want to remind you that, you know, when you're watching us on YouTube, well, subscribe to our YouTube account, and make sure you put comments on the YouTubes that we put up. Follow us on Twitter at askSlim. And we got to really ask you to become a member. Look at the kind of work that we're sharing with you in here. This is hours and hours and sometimes days and days of work to prepare this Friday's show. And of course, our members just get gems of videos throughout the week and get to see all of our rankings and trade setups and our amazing option bias indicator, of which very soon going to release a script on that for our level 4 plus members, and it's going to be some great things coming up here. So do become a member, help support us, support our team. It takes a big team to be able to manage a business like this, and analysts and marketing people, and it just, you know, we're showing you this just so that you can see who we are, but subscribing to us is what will keep this going. So I really want to ask you to become an askSlim member. Level 2, 3, 4, all of that has got tons of information. And go to our membership page and you'll see what all that is. All right, so now let's look at the stock market. We were spot on the stock market this week. We had anticipated that the stock market would get over 2,500 on the S&P 500, that it potentially could get up to 2,520, which was a fib extension level, but that the rally would come only for 3 or 4 days. It would likely stop around the time that the Fed news came out, and that it would then turn lower, and that those levels were likely to be levels that would be very tough to surpass. Here is the S&P 500. So what we're looking at now is a very key pattern that is shaping up in here. First of all, you see the hanging man pattern right there, and then as it turns over and rolls down. That was what we expected. Now, this is a very unusual cycle low right there, as essentially the cycles have doubled up. In other words, you came down and then rallied without much of a decline. So that becomes a very key level. If you get under that level, you could be in a lot of trouble. I think that the possibility of getting much over this 2508, 2509 level that it made is going to be very small. I mean, I don't know if the market's got 0.5% left in it versus some significant downside risk. Now, if it gets under this level right over here, you see that cycle peak resistance, which supported that last cycle. I'm just going to put in an alert under there because I want to say at or below is a breakdown, and I want the system to let me know that it is doing that, so I'm going to create that. And if it gets under that level, it could be some very bad news. We're going to make a modest projection that we're down for the next week, week and a half, that our first target is 24.83. It could be a lot worse than that if significant selling comes in. If something happens in North Korea, then who knows, right? I'm just talking about if nothing bad happens, then I think this is what's going to happen in the stock market. If something bad happens, then it could be a lot worse than that. So S&P 500, I want you to note, still in positive momentum and now getting oversold. So what that says when we look at that is that there's a kind of a likelihood that what's going to happen is that if nothing bad happens over the weekend, as I said earlier in the show, if the world doesn't explode, you probably get a rally here early in the week, and then I think you roll over like that. That's kind of the pattern that I think is going to happen here in the next week. And we're going to call for a down week, testing that level of 24.83 or worse. So when I switch over to the NASDAQ, I want you to see in here, this NASDAQ is a different picture. It's already broken that low. It's under the slim ribbon in here, getting down to this support area that was rising. It's no longer rising. We'll be adjusting that. And I want you to see in here that it's starting to get under the slim ribbon. So you didn't turn negative in there yet. Though I'm going to show you something on the intraday that's interesting. Here is your Russell, RUT, and you could see in here, this is the strongest of them all as it catches up and moves up to that old high. Not quite getting up to the 1452 high, but doing pretty good. This is the strongest index of all, as you can see right in here. Now, comparing all of the indexes on an intraday basis, you can see that here. What we're looking at is the S&P 500 having lost its upward momentum right there. Now, the last couple times it did that, it turned positive again. So if it turns red, it's going to be a different story. Here you can see the NASDAQ, helped by Apple on the downside, actually quite negative. The Dow Jones looking like it's losing its upside momentum, and the Russell in here clearly the strongest of the indexes. Now, I think what's important when we look at this and we look at the S&P 500 in here is that the S&P 500 looks to me like it doesn't have much upside, while the NASDAQ to me, based on what we just looked at, says to me that it is likely to get a rebound from this level. So, I mean, for pairs traders, I think you buy the NASDAQ and either short the S&P 500 or you short the Russell. So here's that NASDAQ again, and you can see it's still green and oversold. Generally, you get a bounce when that happens. And remember the Apple pattern I showed you? The Apple pattern says that it's on the day or two from now where it should get a bounce. So we're looking for NASDAQ to do better than the broad stock market in the coming week. Now, what got me thinking that the stock market was going to peak Wednesday or Thursday of the last week was the VIX pattern. And I said that we were coming into a pattern where I thought that we would get some uptick in implied volatilities. Here's that pattern right over here in this analysis on the VIX. Let's just look at these last three cycles right in here. The bottom due here, we barely have an uptick yet. And here's where I said the next period of stock weakness is likely to come. So while I think that it's a possibility you get an uptick early in the week in the market, maybe a little downtick in here, I think that, mostly next week there's a risk of implied volatilities going up pretty significantly. So we're just at the first day of that potential increase of the implied volatilities of the VIX, first day, right? So we could be, a week or two where we see some pretty good upticks in implied volatility. So that's it, man. I covered a lot. I hope you liked my little fun that I had there, looking at the way that they taught us to protect ourselves back in 1950 from the A-bomb. Everybody was a little crazed right then. So that was fun bringing that to you. Don't forget to become a member at askSlim. That is the key to holding our business together and for us to be able to keep bringing you you this type of information every single week. It's an hour's work to record the show, right? I've just spent an hour with you, but it's hours and days worth of work to put it all together to bring it to you. And we've got to support the team, so become a member. Become a YouTube subscriber and follow me on Twitter at askSlim. That's it for the week. I want you to be careful because, man, is it crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been